Corporate finance practice problem using Excel. Dividend payout policy. Get ready, it's time to take our chance with corporate finance. Here we are in our Excel worksheet. If you have access to the Excel worksheet, would like to follow along, note that we're in the practice tab as opposed to the example tab. The example tab, in essence, being an answer key. Information's on the left-hand side. We're going to populate that into the blue area on the right-hand side, looking at our dividend policy, determining how much of our income we want to be paying out in the form of dividends. Information on the left has the years 1 through 5, as we plan out our dividend policy, income, and then the expenditure. These are going to be our capital expenditures. These are the items or the amount of money that we think that we can invest in the expenditures, such as assets and whatnot, and get a higher rate of return, or rate of return that we are satisfied with, assuming that the rate of return that we can get within the company for these investments is greater than the return that the individuals could get if we were to take the money and distribute it in the form of dividends. In other words, if you're thinking about a corporation from the standpoint of a stockholder, one of the reasons you have the corporation is because you're hoping that you can get a return on the value of the corporation. And one of the ways that could be done possibly is the corporation using its funds, its capital, in order to generate a return on the assets that they have. So it's expected here, one of the thought process then would be that if the corporation can meet its requirements for an expected rate of return, that would generally be higher than the return that the individual could have if they had the dividend, if they had the money themselves. If not, if it's thought that basically the individual could take the money themselves, put it somewhere else, invest in some other thing, stocks, bonds, whatever, in order to get a higher return, then the shareholder would be beneficiating from receiving the dividend, so that it would be removed from the company so that they can then do something else with it to invest it and basically help their portfolio, in that format. So we've got the years here, we've got the income, the expenditures, and then the shares outstanding, we're going to say, are the 2 million on down below. So first, we're going to think about the marginal principle of retained earnings, which is basically going to be this concept where we're going to say, hey, of the income that we have, if we can reinvest it, if we can put it somewhere into capital projects and get a return on it that we believe would be higher than the return we could get if we were to distribute to the individuals, then that is what we will do. So then that determines kind of what our dividends would be. So in this case, we're going to say, okay, let's pick up years 1. I'm going to say equals year 1, and then I'm going to take the autofill handle and drag that down. And then, so we got years 1 through 5, and then go to the alignment and center that. Let's center those. And then we'll put the total down below, total, or let's just call it, well, let's keep it there for now. And then we'll pull in the net income. So I'm just going to pull in the same numbers, the net income. Here it is. Let's drag it on down. Drag it on down with the autofill, pulling in all the numbers. And let's pull in the capital expenditures. These are going to be the capital expenditures. And pull them on down so we have our data populated for us here. So there we have it. Now, if we were going to think about the dividends, we're just going to say, okay, of that 19, we think we have the capital expenditures that we could get a return on of the 7. So the difference then is what we would be giving out in the form of dividends. We're going to say, all right, equals, we earned 19 million. We think that we can invest in capital expenditures of the 7. Therefore, the difference we should give out to the owners so they can take the money and put it where they can get a return on it. And then at year 2, we're going to say, all right, net income was 22,000, capital expenditures of the 10,000 that we think we can take the money and reinvest it, get a return that we want on it. Therefore, the dividend 12,000 once again to the investors. Year 3, we got the 17 minus the 9, means that we're going to give the dividends of the 8 million. And then year 4, we got the 16 million minus the 11 million for the capital expenditures. That leaves us with the 5 million going out to the individuals. Year 5, we got the 24 minus the 12. That gives us the 12 million. I think I said thousand a couple times here on the millions. Pardon me if I messed that up. But we got the cash dividends then. Dividends totaling up over the 5 years. We're going to sum up the cash dividends in the outer column. And so there we have it. That's going to be the 49. So that's one method that we can think about. Now, other policies or methods we might have, we're going to take a look at some other ones here. Let's go ahead and hide the windows. Let's go to E. I'm going to go from E to I, hide these columns so we could see this thing side by side. So we're going to go and select column E, drag on over to column I, let go. So we're on EI, and then right click and hide them. Don't delete them. We're just going to hide them so we can see better. We could see better when it's hidden like that. So now, well, let's assume that we had the dividend if pay div a percent of net income. So let's just say we're going to pay standard policy, a nice easy policy for people to understand. We're just going to say whatever net income is, we're going to be paying out 15% in dividends. And that can be a very predictable type of policy where we don't have as much, you know, if you're an investor, you might like that because you might be able to then predict the dividends, as opposed to saying, hey, we got to figure out how much of the capital expenditures are and whether or not what our income is, and then subtract those two and then determine what the dividend will be. So sometimes this could be a good policy. Again, investors probably would like the stability of a policy like this because it's a predictable outcome for them in some way. So again, obviously there's no perfect situation. It depends on the company, what the company wants to do, what would be the shareholders' preferences as well, who are of course the owners of the company. So we could say then let's pick up the years 1 through 5 and do a nice easy method like this, copying this one down and centering that by going to the alignment and center. And then we're just going to pick up our net income equals the income of the 19 million. We're going to go ahead and grab that fill handle and drag it down. And then we're just going to multiply the income times the 15%. And that's what we think we're going to be paying out in the form of dividends. So we'll just take the 19 million times the 15%. That's going to give us the 2,850,000. This is going to be the 22 million times the 15%. That's going to give us the 3,300,000. The 17 million times the 15% gives us the 2,550,000, and so on and so forth. Let's do this again using our absolute reference this time to make it a little bit easier. So I'm going to delete what we've done so far. I'm going to use an absolute reference on this first cell so we can copy it on down. So I'm going to say the 19 times the 15. When I copy it down, I want the 19 to move down. I don't want the 15 to move down. That's often the case when you're looking at something that's outside the table, this is kind of outside the table, the data set. So this is the one I want to make an absolute reference by selecting F4 on the keyboard or putting a $sign before the L and the 5. You only need a mixed reference, but an absolute reference works, and it's pretty easy to do. So I'm going to then grab the fill handle, copy it down, and so there we have it. Double check by selecting the last one is what I typically do, or one of the last ones. And there it is. This one moved down as we would expect it to. The 15 did not move down. Looks like the calculation is correct, so we've done it correctly. Let's go ahead and font group and underline here, and that'll be our total dividends again. Total dividends equal to the sum of this column for the 5-year period. We're at the 14.7. All right, let's do something a little bit more complex. Let's go ahead and hide some cells, because if it's complex, we want to have as little confusion as possible and be able to see what exactly is going on. So we're going to be hiding the columns from J, putting our cursor on J, selecting the whole column, to M, J to M, Jim, and then right click and hide. Don't delete it. Don't delete it. Just hide it, because we don't want to get rid of the other stuff. We want to go back to it later. So this time we're going to say that we have a stock dividend, but only for years 2 through 5 of 20%. 20% stock dividend. And then we have the per share of the 2.75. So this is a little bit more confusing. We're going to get the stock dividend, which is going to adjust the number of stocks, which currently is at the 2 million. And then once we have the increase in the number of stocks, we can apply the per share kind of calculation. Obviously, the complexity on this would be a little bit in setting up the table. So you might want to practice something like this by doing a whole new Excel worksheet and just practice putting your columns in and setting up your table to work it out. But in any case, we're going to say here, this is going to be number 1 through 5. 1 through 5 again, same starting point as before. 1 through 5, we're then going to center that, alignment and center. And then we're going to have our shares. Now, I'm going to start off with the total shares over here. And in year 1, the total was at the 2 million. And then we're going to say that there's a 20% stock dividend. So it's going to be increasing by the 20%. So this is going to be our running balance type of calculation, where I'm going to say the 2 million times the 0.2, it's going to increase by 400,000. So there's an increase by 400. Let's do that this way, actually. Let's do it with a cell reference. The 2 million times the 20% here. So there it goes up by the 400,000. Then I'm going to say this equals the prior 2 million times, or plus, man, the 400,000. Okay, let's try it again. See if I could do it without butchering it this time. I could talk about stuff without messing up. So this is going to be the 2,000,004 times the 20. That means we've got the 480,000, and then we got the running balance, the prior balance of the 2,400,000 plus the 480,000. Let's do it again. We're going to say now we have the last balance times the 20% stock dividend, adding another 576,000. Now we're going to take the prior balance plus the current change. We're at the 3,456,000. Let's do it one more time, and then we'll do it the easy way after this, because this is the hard way. Times the 20%, we got the 691,200. This is going to be the prior balance plus the current change. Okay, let's do it again. This time we want to do the autofill. Let's see if we can utilize our autofill handle. So I'm going to delete the whole thing and do it again, hopefully faster. This is going to be equal to the 2 million times the 20%. That 20% is outside of our data set. We don't want it to move down relative when I do my copy, paste, or dragging down autofill thing. So I'm going to make it absolute by selecting F4 on the keyboard, $ before the O and 2. You only need a mixed reference, but absolute works. Then we could say we want the 2 million plus the 400. This looks like a more complex calculation, or a fairly complex calculation, but everything is in the table. Nothing's outside of the table. So these will actually copy down the way we would want. When I go down to the next cell, I want this one to move down, and I want this one to move down. No absolute or mixed reference necessary, in other words. So we can then select those two, grabbing the fill handle and dragging it on down, and it should do exactly what we wanted it. So I'll double check by double clicking. Did exactly what we wanted it to do. All right, now we're going to multiply the shares, which we know the ending shares now, times that 2.75 that we're going to be giving out per share. So we're going to be saying, all right, now there's 2 million shares times the 2.75 for year 1. Year 2, we've got the 2,000,004 times the 2.75 for year 2. Then the shares went up to the 2,880,000 times the 2.75 for year 3. Then the shares went up to 3,456,000 times the 2.75, and that's going to give us the 9,504,000. And then we've got the 4,147,200 times the 2.75, and we got the 11,4048. Let's go ahead and do this a little bit the fast way, the easy way. So I'm going to delete these again, and we're going to use our autofill. This is going to be equal to the 2 million times the 2.75. That 2.75 is basically outside of our data set. That's kind of our outside number, and we don't want it to move down. Therefore, it needs an absolute reference. I'm going to select F4 on the keyboard and or put a $ before the Q and 5. You only need a mixed reference, but absolute works too. Grabbing the fill handle, dragging it down, there we have it, and so there we have it. So that's going to give us our total dividends again. Dividends, summing up the outer column, equals the SUM, otherwise known as the sum function. Adding that up, and that's going to give us our 4928. Okay, let's do one more of these. And so I'm going to hide again, going from N to R, NR. We're selecting NR columns, and then right click, don't delete it, hide it. Don't delete it, just hide it. So then this time we got the stock dividend on years 2 to 5 at 20% again, and then we have our payout ratio, which is a common way that we'll see something. So we've got the payout ratio at the 30%. That's going to be payout ratio based on generally the net income. And then we want to figure out this time the dividends per share. So we'll break this out to the dividends per share as well. Note that I changed the header to years here, so we should have years for the header. So we're going to be picking up year 1 through 5 again. Picking our cursor up, auto-filling that down, 1 through 5, centering that in the alignment group and center. We have that same kind of situation with the stock dividend. So I'm going to do this a little bit faster because it's basically the same thing. Starting off with the total, we start off with the stock at the 2 million. Then we're going to increase it by that 20%. So I'm going to take the 2 million times the 20%. That 20% is outside of the table. Therefore, when I autofill it down or copy and paste, I need to make it absolute so it does not move down. So I'm going to say F4 on the keyboard, $ before the T and 2. And you only need a mixed reference, but the absolute reference works well. Then we're going to take the 2 million plus the 400,000. None of these are outside the table. Both of them need to be moved down relative to the copying down the referenced cells. Therefore, no absolute or mixed reference. Then I'm going to select those two cells, grab the fill handle, and drag it on down. And it does, once again, what we would expect. Double click in the last one, checking it with a double check. Double check. We got T2 still up top, and then we've got everything looks like it's doing what it should. So then we're going to pick up the net income. So I'll pick up the net income, which is simply over here given to us in the data set, copying that on down with the autofill, dragging it down with the fill handle, net income pulling over nicely. Now the dividend's just going to be a payout ratio. So the payout ratio, once again, is just a percent of the net income. So we're just saying we're going to be paying 30% of the net income. So that's a straightforward calculation. We're going to take the net income times the 30%. That's the ratio or the amount that we're going to be paying out. That 30% is outside of the table, and we want to copy it down, but we don't want it to go down when we copy the cell down. So we're going to absolute referentize it with an F4 on the keyboard, $ before the U, $ before the 3. You only need a mixed reference, but an absolute reference works well. So I'm going to grab that cell, grab the fill handle, drag it down, grab it and drag it, grab it and drag it, double click in the last one. It does indeed look like it does what we want it to do. And now let's look at the dividends per share, because the dividends per share are going to change due to the fact that the total shares have changed. So let's do the calculation for the dividends per share, which would be the number of dividends divided by the total shares, which are changing as we go. I'm going to do a couple of these calculations, and then we'll do the autofill, going back and do the autofill. So I'm going to select this column, number group. Let's make a couple decimals so we got pennies involved. And let's do it again. So this is going to be the dividends divided by the shares, which shares have gone up. Dividends divided by the shares. Shares have gone up. Dividends divided by the shares. And dividends divided by the shares. So just so we can emphasize those calculations, let's do it the fast way now. This is a nice easy one to drag on down with the autofill. So I'm going to delete and do it one more time. Deleting it, doing it one more time. We're going to be taking the dividends divided by the total shares. Going to do the good old autofill thing that we've been doing a lot here. Grabbing the fill handle, grab it and drag it. Grab it and drag it down. So there we have it. Double click the last one just to double check it's doing what we want. It is. It's doing just what we want. So let's total up some cells. Let's total some stuff up. So we got the new shares over the 5 years that were issued. We could sum that up. Why not? Is that the total shares? Not really, doesn't make any sense really to total that. Net income, we could total that. Net income over the 5-year time period is that. And then the total dividends, let's total those up. Equals the sum of the divs, and it doesn't really make sense to total the dividends per share. That doesn't make. So let's go ahead. I'm gonna underline these, font group and underline, and so there we have it. Couple different ways you might see presentations of the dividend policy. Let's go ahead and unhide some cells. So I'm gonna select from cell C to S. Obviously, there's some hidden cells between D and S here, because if you do the alphabet, like S doesn't come after D, which makes us think there's some hidden cells right in there. So I'm going to put my cursor on column C to S, and then right click and unhide. And if we didn't delete them last time, but only hid them instead, then we should get the stuff back. So we got our total dividends under the various policies that we have here. So various policies that you might have in place. Again, obviously the policies for the dividends will vary from company to company. There's no set way, there's no regulation saying you got to do it this way according to generally accepted accounting principles with regards to, the types of dividends and how many dividends and stock dividends and what you want to be giving out. It will be dependent on the nature of the company, how much cash is there, can they reinvest the cash, what are the desires and needs of the stockholders for that particular company, for that particular industry.